Yo, yo, yo! What's going on? I'm back, I'm back. You thought I was gone that easily? Come on, come on, come on. Now, on a serious note, thanks for watching my channel again. I hope you guys enjoyed my video yesterday. I'm gonna try to just pump out as many videos as I can, maybe once a day. On the weekends, obviously, today's Sunday, so I think what I'm gonna do is just kind of like what I did in the video yesterday, is just pick a random trading day, kind of go through my thought process, and just go bar by bar as the market opens all the way to the end of the trading day, because that's how I learned. I learned by just kind of sim trading at first, but also when I'm studying and not actually trading live, what I like to do is just go bar by bar and kind of test myself in given scenarios. Okay, like, would this be a good short opportunity? Would this be a good long opportunity? And think about the reasons why. And by making these videos, to be honest, it's going to help me out as much as it is going to help all of you guys out, because something that I learned, it took about a year to learn, to really get ingrained in my head, is how much trading and the charts and technical analysis is really just a language. It's a language. You just have to put two and two together, take market context, signal bars, everything that you've learned, everything that goes into this specific strategy, which I'm going to explain, and then applying it in real time, obviously. But just like a language, once you start to get the hang of things, you're gonna start being able to have a conversation. Then you're gonna be able to string some more sentences together. Then you're gonna be able to write down. Then you're gonna be able to have fluency at the very peak of your abilities. But it does take time, and the reason I'm gonna make these videos in this way is because I think, quite frankly, if you just watch enough of them and practice them yourself and just compare um, good trades to bad trades, that's the best way you're gonna learn. So it's enough talking. Let's just open up NinjaTrader. This is the platform that I use. I trade futures. If you look in the top left corner, ES futures, and this is a 2000 tick chart. So every 2000 transactions, a new bar will be formed. And the reason that we trade this way is because it is more accurate than a time chart. And also, I'm just gonna pick. All right, let's go right here. Okay, June 28th. And also, compared to many other charts and many other styles of technical analysis, like, we're literally just dealing with the bars on the chart, price action. That's the beauty of this method. You don't need to overcomplicate things with RSI, VWAP, da 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 da. You don't need to learn all these different candle patterns and like head and shoulders, and I don't even know those things. But at the end of the day, it's all teaching the same things, but in a much simpler way, and I think in a much more effective way. So, okay, this line just signifies the end of the previous trading day and the beginning of the new one. I'm gonna change my pointer. Okay. So, actually, okay. So all the way on the right side of the chart. Okay. Okay. So this is about 5:30 a.m. So say you wake up at 5:30 a.m. Pacific time, so you have an hour until the market opens. When you first look at these bars, um, it kind of looks very choppy. So you can see the first thing that I like to do is just draw my trend lines. The most obvious thing to do, okay? Trend line. The rules with trend lines is once there's an uptrend, in this case, there's one break, you expect that there's going to be a test of a new high. So we want to see a test of this high. It doesn't mean it's guaranteed, but it is very likely that'll happen. So until that happens, then we can start looking to shift gears and either look to be in a trading range or look for potential reversal setups. So this is 617 all the way on the right side, and it really looks pretty choppy. Like, you can tell it might be a trading range structure, but at the end of the day, like, it's just choppiness waiting to get to the market open. So, okay, the market just opened right now. And like I said before, because we're technically still in this uptrend, we really don't want to look for shorts just yet unless like it breaks below the EMA and there's a very, very high probability setup. But for now, let's just see what happens. We have to also pay attention just to this resistance right here. So maybe we just draw a line right here. Like so. Because if there is a nice short setup, we might want to take it. But for now, like we do want to just first see if there's going to be a test of this new high. Okay, so as we can see, okay, right now there's a new high. So let's just see what happens. It's going. No high probability setups just yet. I'll let you guys know when I start to see one. Okay, so this is starting to get interesting. Notice how the bars just keep going up and up and up, and it seems that there was another maybe short-term trend like this. There might even be a completely wider trend. Maybe something like this. Like if we were in real time, I might try to do something like that. But for now, I don't think that's necessary. So, just like in the previous trend channel on the left, just because there's a break of this trend line does not mean that we're going to look for reversals just yet. But we do see that there's a break and a new high. So something interesting might happen in a short period. It's okay. So this is the first entry. Right after this bar all the way on the right side, because the next bar broke above it, it's technically a first entry. And now it's followed by a second entry long should the next bar break above this doji bar. Now, this is very, very important. I'm not even going to look at the next bar just yet. But in the right context, this strategy focuses on second entry longs in an uptrend as well as second entry shorts in a downtrend. Right now, if the next bar was to trigger above this doji one, it would trigger a second entry long. And what that means is we would like to place a market order one tick above the signal bar, which in this case would be the doji bar. So we would place a market order at 39.46, and our stop loss would go under the signal bar usually, but because this low is technically like a swing low, we would go under that bar. So it would be at 39.43. So we'd be risking 3 points to scalp 1 point. However, even if the next bar, in this case, broke above this one, triggering a second entry long, I wouldn't take this trade for a couple reasons. Maybe you can pause the video and try to ask yourself why. But because there's already a break and a new high of this uptrend, even though it's off of the EMA and there's a doji looking bar, a bullish looking bar, it closed on its high, we always want to draw trends no matter how small they are. So first of all, there's already breaking a new high of the uptrend, so it signals that the momentum is weakening. Also, there is a mini little downtrend right here. So until we have a new low of this, I really don't want to go long. If there wasn't a break and a new high of the trend, then I would, but okay, so this is interesting. Let's see what happened. Okay, boom. So you would have been stopped out. So even though it's a second entry long, beginner traders would have taken that trade. Smart, experienced traders would have skipped that trade because look, it went from 39.46 to 39.47, which is 1 point. However, it's very unlikely that you're even gonna scalp out on the trade because you do need one more tick usually to tick through your limit order. So this is really a second entry long failure. It would be tempting to take this failure, but because the majority of this red bar is still above the EMA, I wouldn't take that just yet. So let's just see if there's another setup. Okay. Now, this short does look very tempting. There is a mini little congestion right here. And this is kind of like a breakout pullback. And also, if you count from this high, if you're counting from this high, this would be a first entry, second entry long, and then we're looking for a failure because it's such a bearish bar touching the EMA. I would take this trade. Let's see if it would have worked out. So that would have went down from 39 to 37.50. So it would have worked for a little more than a point scalp. If we would have went short right at this bar, if we would have sold below it and put our stop loss above. Okay, so let's keep going. Nothing interesting just yet. We might want to extend this little trend. And when you're getting to this point and there's more and more bars printing, okay, this is about 7 p.m. Pacific Standard Time, 10 a.m. Eastern. You always want to keep in mind what's the grand scheme of the entire day. So as we see, it's going down and going down and going down. We're expecting it to maybe even test the low of the day, but we'll see. It's just something to keep in mind, like the context. Okay. No second entry short just yet. There's a first entry short with this red bar. Okay, right there. Once this red bar broke below the one before it, that's first entry short. And there's a second entry short right here. But this would be the signal bar all the way on the right side. This doji looking bar, this would be the signal bar, which is a pretty horrible signal bar if you're going short. Just once, like I said about the language, like that's not a good signal bar. Like, why would you go short below that? Where's the bearish momentum? It's just even. It's very neutral. So, okay, let's keep going. And another very important thing to note is, look, this is 7:30 a.m., so the market's been open for 1 hour. Right now, I've only seen one trade set up. And really, I only need 2 to 3 wins a day, and I'm solid. But it is very, very difficult, and it does take practice to sit on your hands and just be patient for these setups to arise. And once again, like this is a simple trading method, but it works. So just what seems logical to the normal eye is that there's a downtrend. So I'm going to draw a downtrend until there's a break, a new low, or just a straight up reversal, because it doesn't always have to happen like that. It doesn't always have to be a break in a new low or a break in a new high, and then like people will magically start going the other direction. Like it's not 100% certain, but it helps you be on the right side of the market 99% of the time. So, or most of the time. Okay. So, counting from this new low right here, we're going up. First entry short. Second entry short. Once again, this is not a very good signal bar because it's a kind of neutral to bullish bar. So we would skip that. However, this is a kind of an advanced trade right here with this red bearish bar, because if you count from the low, it's technically a first entry short, second entry short, third entry short, which really is not that high probability of setup, but in the right context, it's really like a double trap. So let me explain that. So counting from this new low, if we're going up, first entry short, second entry short. So right now, whoever went short after this bullish looking bar, like I said, they're going to put their stop loss above the bar. So they're going to put their stop loss at 3909. So if this second entry short fails, which it did right here, all of those people who went on their stop losses above this bar, they're going to get trapped. And all the people who went long after the first entry short, second entry short failure. So there's also people who go long too early because they're going to go long right here. They're going to put their stop losses below that signal bar. But this isn't a very good place to go long just yet because it's below the EMA. There's not a break and a new low of this downtrend. So once we see this bullish bar and it's followed by a very bearish bar, and it's also a double top, third entry or third entry or um, double trap. So you're trapping all the people who went long too early and the people who went short too early because the people who went short too early, they're sitting on their hands and they just got a loss. So they're going to want to make that right back in their heads. And look how many times this has touched this trend line. 1, 2, 3, 4. So if we went short right here, it would have been a beautiful trade. Now, what do we see? A break. New low. Approaching these lows of the day. So, even though it's a little break, we want to stay away from any potential setup. Okay, so once again, counting from this new high, first entry long, second entry long. If we're gonna look for a second entry long failure because this is a downtrend, we would go short below this bar. However, because there's a break a new low, we want to just sit on our hands. If this seems confusing, I don't know if it does. Leave me some comments. I'd like to hear some feedback for sure, but it'll make sense once you guys keep watching more and more videos. Okay, so counting from this new low, first entry short. Oops. First entry short once that doji bar broke below that. Second entry short failure. Now, this is actually a very tempting trade. I'm going to mark it. Remember, there was a break and a new low. Here's the new low. We're going up. First entry short once this doji bar breaks below that red one right here. Once it goes above again and the next bar breaks below that, that's a second entry short. But remember, this downtrend is pretty much over for two reasons. There was breaking new low and we're above the EMA. We're also expecting a new high of this trend. This is a very short-term trend. So first entry short, second entry short, failure. We want to buy if the next bar closes or triggers above this one. So let's see if it would work. Now, this second entry short failure never triggered. So because we would only enter the trade if the next bar broke above 3906, this trade, like, there's no trade. Now, first entry short, second entry short, failure, trap. This is a very aggressive but advanced trade, but it should work. Let's see. So, at least for a scalp. So, it went from 3901.25. Yeah. So, it didn't work, but like I said, it's very aggressive for two reasons. First of all, there's a break and a new low of the downtrend. And even though it's a very bearish signal bar, look, the majority of it is above the EMA. So, I mean, in a perfect world, like, you're not taking that trade, but if you're kind of aggressive, like, some people do take that. And now it's some choppiness, but this is very interesting. Look at this momentum down. Remember, we're still looking to maybe test those lows. We keep going. So there might be a wider trend channel. Maybe something like this. So once we see that, we definitely want to shift gears. Look how nice this fits. And it doesn't look like there's any second entry short setup. That was actually decent. Like, all these bars are stacked. So even though there's this massive momentum down, you're really just gonna have to skip. And okay, this is interesting. See how there's an overshoot? This isn't a break, but there's an overshoot. So kind of similar to a break of a trend, an overshoot kind of gives credence to the fact that we might want to test the upper line of this channel. So market keeps going down without us. And yeah, they're really, I don't see any very, very high probability setups. But I do see a downtrend that keeps continuing. So what does that say? Maybe the trend line isn't really an overshoot, but maybe it's even a wider trend. You're always looking for whatever just gives the most touches possible. I'm just looking at one thing. So, okay, right here. Let's take a look at this. Counting from this new high. Remember how I said sometimes you just have to look at a wider channel? Now, this doesn't necessarily mean it's valid because there isn't very many touches, but like at this point of the day, just like I said, like think like it's a language. Look how strong this downtrend is. Like all we see is choppiness. All we see is momentum down. Like even there's these many little trends within the trends. And we really do want to see a new low of this trend too. So we want to test that low. There's a break, no new low yet. And even though it's above the EMA, until there's a very high probability setup above the EMA, off the EMA with a bullish bar, like we want to avoid going long. Like look how bearish it is. So new high right here. First entry long. Second entry long. Do you guys see that? Second entry long because this bar broke above this. Second entry long failure. Should the next bar break below this one, we would go short below this bar. It would have worked for a scalp. There's even a lower high right here. You might want to even take this mini trend channel. You might want to take this. More aggressive trade would have worked out in that case. Zoom out again. Going. Okay. See how it keeps going down? Wider channel again. Look how nicely that fits. New low. First entry short. Second entry short. Double top. Bearish bar. Take that short. Would have worked out again. Keep in mind, these downtrends are designed to look like they're weakening, but all they're doing is trapping more people trying to go long too early, more people trying to go long too early. So always be in the mindset short until there's a clear break and new low. Okay? See what happens. We're going. Still getting rejected, okay? Still getting rejected. Okay, break of the trend channel. Even though there's a break, like this is still insanely bearish, and I wouldn't even look for long, especially like this is 11:03, 2 p.m. Eastern time. Like we're getting late in the day, so it's gonna be more risky no matter what you do. No second entries, but keep drawing your trends. See how strong this momentum is? Like at this point, you can like don't be afraid to also just like adjust your trend lines too. Like all you're looking to do is having the most accurate trend line possible. I mean that looks pretty good to me. Okay, look at this. So look at this momentum. I'm gonna count from this new low. Okay, new low. No first entry yet. It's just going up. First entry short. Second entry short. Look at this bearish bar. Okay, remember? New low. Going up. First entry short. Going up again. Second entry short if the next bar breaks below it. Now, you could take this trade. I wouldn't for two reasons. Look at this mini short-term uptrend. You want to wait for the new high of that to be confident going short. Second of all, even though it's a very bearish bar, you're above the EMA. So it's going to be very low probability compared to the 99% probability trades that we're really looking for. So it would have worked because if you did go short below this bar, you're gonna put your stop loss at 38,725 above this one tick above. But you would have had to sit through all of this, and you would have almost got stopped at. But eventually, it would work. But once again, just because it works this time doesn't mean it's gonna work every time. Let's see. Okay, and at this point of the day, 12:35, 1:35 Eastern, like call it done for the day. Just look at this choppiness. Yeah, the last half hour of the day, you really just want to stay out of it. Okay, and all right, that's the video. I think it was a pretty good video. Let me know what you guys think in the comments. But thanks for watching. Let's fucking make some. Let's go, baby. Let's go. This is good practice for me too. Man, this is kind of fun. All right. Have a good one. Peace out. And trade out. Maybe that's my new saying. All right. Peace.